Hey there, Investing Iguanas. It's your favorite financial lizard, Iggy, back with another deep dive into the world of Singapore finance. Today, we're talking about something that's been on everyone's mind lately, the potential comeback of S-REITs in 2024. Stick around, because by the end of this video, you'll understand why S-REITs might be the dark horse of your investment portfolio this year. We'll cover the challenges they've faced, the signs of recovery we're seeing, and some top performers you might want to keep an eye on. So, grab your favorite beverage, get comfy, and let's dive in. Now, before we get into the nitty-gritty, let's take a quick trip down memory lane. Remember when S-REITs were the darlings of the Singapore stock market? Investors couldn't get enough of them. But then, like a plot twist in a Hollywood movie, things took a turn. Interest rates started climbing faster than a gecko on a wall, and suddenly, our beloved S-REITs were facing some serious headwinds. But here's the thing, my fellow investing iguanas, every cloud has a silver lining, and I'm seeing some pretty shiny linings in the S-REITs market right now. Let's break it down. First up, interest rates. They've been the boogeyman for S-REITs for a while now, but guess what? The U.S. Federal Reserve has been hinting at potential rate cuts. This is huge news for S-REITs because it means their borrowing costs could come down. It's like when you're haggling at the wet market and the vendor finally starts lowering their prices, you know things are looking up. Next, let's talk yields. S-REITs are currently offering dividend yields averaging around 7%. To put that into perspective, it's like getting a 7% discount on everything you buy for a year. Compare that to the Straits Times Index's yield of about 5.3%, and you can see why investors might start giving S-REITs a second look. But wait, there's more. Many S-REITs have been playing it smart during these tough times. They've been keeping their debt levels in check, with the average gearing ratio at about 38%. That's well below the 50% limit set by regulators. It's like these REITs have been on a financial diet, getting lean and mean for whatever the market throws at them next. Now, let's zoom in on some sector-specific growth. E-commerce has been booming, right? Well, that's been great news for industrial and logistics REITs. And with everyone and their uncle talking about digital transformation, data center REITs have been seeing some serious action too. Alright, now that we've set the scene, let's spotlight some S-REITs that have been turning heads faster than a chameleon in a rainbow factory. First up, we've got Capitaland Integrated Commercial Trust, or CICT. This is the big kahuna of S-REITs, the largest by market cap. With its diverse portfolio of retail and office assets, CICT is well positioned to ride the wave of Singapore's economic recovery. As of our latest data, CICT is trading at $2.05, up 2.5% year-to-date. Not too shabby. Next on our list is Mapletree Industrial Trust. This REIT has been surfing the wave of tech and logistics demand like a pro. Their latest financial results show a distribution per unit of 3.36 cents for Q1 2024, up 3.1% from the previous year. The stock is currently trading at $2.45, showing a modest 1.2% gain since the start of the year. Then we've got Fraser's Logistics and AMP Commercial Trust. These folks have been making some bold moves, expanding into the German market recently. It's like they're playing 3D chess while everyone else is still figuring out checkers. The trust reported a distribution per unit of 3.52 cents for Q1 2024, and the stock is trading at $1.15, up 3.6% year-to-date. Last but not least, let's talk about Keppel DC REITs. In the world of data centers, these guys have been absolute rock stars. With the increasing reliance on digital infrastructure, owning Keppel DC REITs is like having a piece of the internet's real estate. The stock is currently trading at $1.95, showing an impressive 7.1% gain since the beginning of the year. Now, I know what you're thinking, Iggy, this all sounds great, but what's the catch? Well, my scaly friends, it's not all sunshine and cricket sandwiches. There are still some challenges on the horizon. For one, the global economy is still about as stable as a gecko on a slippery leaf. This uncertainty could impact tenant demand and property values. We're also seeing some sector-specific challenges. Office REITs, for instance, are still trying to figure out how to deal with the work-from-home trend. It's like they're trying to sell sunglasses to moles, they need to get creative to attract tenants. And let's not forget about interest rates. While they might be coming down, they're still historically high. REITs will need to navigate this carefully, like a lizard tiptoeing through a bird's nest. But here's the thing, with challenges come opportunities. The current situation might just be a golden chance for investors to get into S-REITs at attractive valuations. It's like finding a juicy bug when you least expect it. Now, let's take a quick look at what the analysts are saying. According to recent reports, many analysts are cautiously optimistic about S-REITs in 2024. They're forecasting a potential total return of 10 to 15% for the sector, driven by a combination of dividend yields and capital appreciation. However, they also emphasize the importance of selective stock picking, as not all REITs are created equal in this environment. So, what's the takeaway for us investing iguanas? S-REITs might be at a turning point, offering a mix of attractive yields, potential capital appreciation, and a way to diversify your portfolio. It's like adding a new color to your camouflage. It might just give you the edge you need in this investment jungle. Remember, investing is like shedding your skin. It's necessary for growth, but you've got to do it at the right time. If you're thinking about adding some S-REITs to your portfolio, now might be the time to do your research and consider making a move. As always, don't forget to do your own due diligence. Every investor's situation is unique, so what works for one might not work for another. It's like choosing your favorite basking spot. You need to find the one that's just right for you. That's all for today, Investing Iguanas. If you found this video helpful, don't forget to smash that like button harder than a lizard catching its prey. Subscribe for more financial insights, and hit that notification bell to stay updated on all things Singapore finance. And hey, if you've got any thoughts on S-REITs or questions you want answered in future videos, drop them in the comments below. Until next time, this is Iggy, reminding you to stay cool, stay informed, and keep on investing. See you in the next video.